So my name is Dave Kaiser. I'm a realtor with Dave Jones Realty. I have Khandi, who's also a realtor. He's also an investor. And then Brandon Parenti with BestWay Mortgage. And we're here tonight to speak a little bit about first-time home buying and what you may need to get started in searching for a home and successfully getting one. So with that, I'll just introduce Brandon and have you get started.
All right, awesome. Well, thank you, Dave. I appreciate you guys giving me the opportunity to come out and educate you guys a little bit on the first steps in becoming a homeowner and what exactly you need to do to set yourself up to not only get pre-approved, but then obviously, make an offer, go through the process and own a home. So the first step is always getting a pre-approval. What does that mean? What does that entail? The pre-approval process is very, very easy. It's super easy, actually. I just need basic information from you. So typically, either it's over the phone or I have a online application. It takes 5 to 10 minutes to fill out. And with that, it just grabs all of your basic information from name, address, income, assets, and just goes over some of your background. And with that information, I'm able to go through and determine what program, pricing, interest rate, everything that I'm going to need to know is going to be from that information I gather from that initial pre-approval. Once you have that pre-approval letter, it's sent to not only you, but your real estate agent. And what's on there is it's going to tell your agent and you what dollar amount you're pre-approved for. And that's going to change depending on what type of property you're looking for. Depending, on a condo, you have something like an HOA fee. On a multifamily, you have income that you could use from an auxiliary unit or a second or third unit. So it's really going to depend on the program that you're looking for, and it's going to depend on, the type of property that you're looking for. With down payment requirements, just to touch on it, there are programs that are out there that are 3 or 3.5% down. I'm going to go into those a little bit further. A lot of people have a common misconception that to buy a house you need 20% down, and that's not the case. The only time you would really go 20% down is if you had it and you wanted to avoid mortgage insurance. Mortgage insurance is so inexpensive that it doesn't make sense to put down the full 20% unless you have the ability to. So a lot of people will ask me, what's the requirement for a down payment? And that's really going to depend on the program. So we'll cover that. There is something called a seller concession that I want to get into as well. And I also want to go through the process, contract to close, and then I'm going to go into specific things here. So to start off, once you have that pre-approval, all that information that I just mentioned is going to be on it. You're educated enough to know exactly what you're going to need, to close on the home, whether we have that seller concession or not. And then we're going to go through the process. So I'm going to gather all of your basic documents from the information that you originally gave me. We submit the file into processing, which is then reviewed by an underwriter. And as you go through the process, there's going to be something called conditions. So these are the things that the underwriter is going to request to approve your loan so you can get the actual mortgage. Some of these items are obtaining homeowner's insurance, title work from the attorney's office, an appraisal to make sure the house is worth what you're paying for it. Whether you need a seller concession or not, what that basically means is in some cases you can work into a deal where the seller covers your closing costs and prepaid items. I mentioned to Vic and Dave before, in this market being extremely competitive, seller concessions aren't as popular as they once were. If a house has been sitting on the market for quite some time, you could ask for it. And what that basically means is, let's just say for the sake of numbers, you find a house for $100,000 and your closing costs are going to be $7,000. You would then offer virtually $107,000 for the house. And at closing, you get that $7,000 back to cover your closing costs and prepaids, and that allows you to come to closing with just your down payment. When I go into the different product types, I'll go over what the down payments are with that same example, just so it makes the most amount of sense. I also want to touch on the difference between a pre-approval and a pre-qualification. There actually isn't a difference. A lot of people think, okay, well, if my file, if you have all my documents compared to you don't, they're one of the same. I only gather documents from you if it's absolutely needed to issue that pre-approval letter. And if it's not, then I just basically gather those documents once your file goes into underwriting. I also wanted to touch on the do's and don'ts of once you do receive that pre-approval letter. The do's are, all the exciting things. I want you to call us with any questions. It helps when you stay at your current residence, just so we're not changing documents, changing your license, or your pay stubs aren't lining up from one to another. Continue making your rent and mortgage payments. Continue using your credit as normal. Keep working at your current employer, and stay current on everything that you currently have. Because not to sidetrack, but I've had people in the middle of processing. The house falls through, they stopped paying on a credit card. Your credit report expires, we re-pull it, and now there's a late payment, and now that jeopardizes the pre-approval, and you're now in a different position to where you were originally. Some of the don'ts is once you have that actual pre-approval, don't start applying for new credit cards, don't finance anything, don't change anything on your credit profile, because the credit aspect of a mortgage is the most important. I've talked to people where they might make an incredible salary, they might have a lot of money in the bank, but they don't have a great credit score. They're not able to purchase. So I definitely want to go into that in a little bit more detail as well. Something as simple as your credit utilization rating. Credit utilization is, let's just say, your balances on your credit cards. So if you have $1,000 limit, and let's just say your running balance is always $900, but you make those on-time payments every single month your credit score is going to go down, because that credit utilization rating is basically a trust the creditor has with you as the credit card, authorized person to use it. I like to use the rule, like, keep it below 45%. So in that case, $1,000 limit, keep it below 400 at all times. And a lot of people say, well, I use it for everything. The answer is easy for that. Open more than one credit cards, as long as you're making the on-time payments and keeping the utilization down, your score is only going to go up from there. And then, what I even do personally is every year that goes by, I'll call them and ask them to increase the limit, because again, the more credit you have available to you, the more your score is going to go up each and every month. Any collections or any type of mortgage that exceed $2,000, they're going to have to be paid before closing, and we can work on that throughout the pre-approval process or once you're in underwriting. That's kind of the rule of thumb for any type of mortgage. Self-employed borrowers, I don't know if anybody here is self-employed, but self-employed borrowers, we have to go off of the tax returns and what you actually claimed on your tax returns for the last 2 years to calculate your income. So, some people make, let's just say they made 100 grand a year, but they only showed $20,000 on their tax returns. That's the only income we could legally use. So from a real estate agent standpoint, that pre-approval naturally just takes longer because we have to calculate that income. So let me just dive into the two major types of mortgages, and that's going to be FHA compared to conventional. The market for a little bit, about a year ago, shied away from FHA and focused on conventional because conventional was a little bit of an easier, more streamlined process, but the market's coming back to where they're openly accepting both programs again, which is great because FHA allows for credit scores down to a 620, and that's huge. I mean, a 620 credit score, and with that, they only require a 3.5% down payment. So like I was saying before, we'll touch on that $100,000 just to keep numbers super, super simple. So on a $100,000 loan, you only need $3,500 for a down payment. I was talking to somebody who was signing a lease today, actually with Dave Kaiser, and what were they putting down, Dave? I think you said $3,600. Yeah, so I mean, they're already there with the down payment, and then let's just say, depending on where the market is, you can ask for a 6% seller concession. So let's just say your closing costs and prepaids are $6,000. So $100,000, you buy the house for $106. You're closing on that house with $3,500 out of pocket. That's it. an appraisal and a home inspection could be paid for with a credit card. So, I mean, you could realistically buy $100,000 house for less than $4,000. I mean, it's incredible. FHA is backed by the government. A lot of people think, so what does that mean? So the government gives me the money? No, it's backed by the government. So let's just say, God forbid, something happened down the road and you went into default on the mortgage, the government would then back that loan. And because they do that, they have a fixed mortgage insurance amount. It's kind of like a one shoe fits all. It's 0.85 of the loan amount every single month. So it doesn't go up whether you have an 800 credit score or a 620 credit score. And there is upfront mortgage insurance to kind of protect that as well. And that's rolled into the loan amount. So, I mean, with FHA, you're coming with minimal amount of money down. And even with that same example with, $6,000 seller, or without the $6,000 seller concession, and you have to come up with your closing costs and prepaids, I mean, you're still talking, $12,500 out of pocket to own a home. A lot of people will pay that in 6 months of paying rent payments or even less. The nice thing too about FHA is they allow for a higher debt to income ratio. What your debt to income ratio is they take your income before taxes, and they ratio compared to the debts that you have monthly, including that proposed housing payment, they allow for you to spend up to 56% of your income. So, I mean, that's the most allowable that you could possibly go. So let's just say, the difference between conventional and FHA, conventional is only 50%, and in some cases 43. So maybe with conventional, you're only pre-approved for 125,000, and then we go FHA and you could go upwards of 180. It makes a huge difference. One caveat with FHA, let's just say somebody has that lower credit score and has to have that mortgage insurance for the life of the loan. If they have the means to put 10% down, you could then eliminate mortgage insurance without refinancing into a conventional loan down the road. So that's kind of FHA in a nutshell. And again, that is coming back into the market. Conventional, they require a 640 credit score, but even with a 640 credit score, it doesn't guarantee that you're going to get a conventional mortgage. Because with conventional mortgage, they need a number of compensating factors. So what are compensating factors? That's going to be income that you are earning that you don't need to qualify for the mortgage. So let's just say you have overtime, bonuses, that type of income that we don't need to qualify you. That's considered a compensating factor. Let's just say you have extra assets, or you have a retirement account, stocks, bonds, trades. You have those funds in a separate account. We're not going to use them for your transaction, but we could show them. So if you're teetering around like the 660 mark, 650 mark, and we have compensating factors, we could possibly go conventional. With conventional, they do have a first-time home buyer program. And to qualify for a first-time home buyer, it's not forever never owning a house. It's just you can't have owned a home within the last 3 years. So I've had first-time home buyers come back to me over time because they sold, they rented for a while. Let's just say they moved out of state and they came back, they can be a first-time home buyer again. And that percentage down is 3%, so even less than FHA. The only caveat to that is there are income restrictions. I pulled up Middlebury, where we were going to meet tonight, and the income restriction there is around $86,000. So as long as you're below that $86,000, or at least one person who's applying, you can go with that 3% down program for conventional financing. The nice thing about conventional is once you hit 20% equity in your home, you could drop the mortgage insurance. So anywhere from that 3% down, standard conventional is 5% down. So anywhere between there, you have mortgage insurance just until you hit 20% or for 2 years, whichever one is longer. The seller concession with conventional though is it's a little confusing. But if anytime you put down less than 10%, you could only get a 3% concession. So if funds are tight, we might opt to go FHA 3.5% with that $6,000 concession compared to putting a 0.5% less down with the conventional 3% because you could only get that 3% seller concession. That only obtains to certain buyers. Oh, go ahead, Dave.
Randy, I'm sorry, and that's 3% of the purchase price, correct?
That is correct. Yeah.
Okay.
So so for that example, 100,000, we'll buy the house for 103. they're putting 3,000 down, getting 3,000 back. So it basically washes it. And then they basically just pay the rest of the closing costs and or prepaids. Anytime you put down 10.1% to 15%, it then matches FHA, where you get back a 6% seller concession, and then for 15.1 and more, you get up to a 9% seller concession. So that's kind of, you know, where the concessions fall. And then the mortgage insurance, yeah, so I covered that as well. So yeah, so mortgage insurance is private on a conventional loan compared to that set rate on an FHA loan. And just a little bit of a difference between FHA and conventional, just because we kind of summed up the two of them together. So an FHA, I was saying before, is backed by the government. So what that basically means is the government has appraisal standards. They want to make sure the house has no health or safety issues. So what this means is if you're looking at a house with peeling paint, there's a staircase without a railing. You go in the basement and let's just say there's holes in the walls, things along those lines. The FHA appraiser, not a home inspector, but the appraiser is going to come in and they're going to notate all of these items and they're going to say, we need these repaired. With a conventional loan, when an appraiser goes out, they're just going to make sure the house is structurally sound. They don't really address or alarm for any health or safety hazards. So that's one big thing to know. The other is FHA, they do require a little bit more documents and information because again, it is backed by the government. So they want to, you know, make sure they're covered. Where with a conventional loan, it is private. It is through the bank or the broker, whoever you're working with. So those are the two big differences. That is why conventional was more popular for quite some time, because it was a little bit less, or it was a little looser regarding the requirements. But again, I mean, and Vic and Dave, you could weigh in on this. I think we're seeing the market kind of turn to where we are getting some FHA accepted again, and they are kind of, you know, both across the board now.
Yeah, you and I worked earlier, well, last year with somebody who I kept, you know, the market was a lot tighter then, but, you know, I kept putting in offers. They had an original FHA loan. We came to you, they switched to conventional loan, and the very next offer we made, they got the deal.
Yeah. Yep.
So, you know, that's the kind of difference I think that you're talking about there. But yeah, the FHAs are being accepted again.
Yeah. Yeah. And I was working with these buyers today. I pulled their credit. It was below a 640. They needed to go conventional. The house, they wouldn't accept FHA. I was able to tell them to pay down 2 of their credit cards and get me documentation. And I was able to go to the credit bureau and do what they call a rapid rescore. And I was able to get them from, they had a 732 credit score. I'm sorry, 632 credit score. And I got it up to a 647 in just 3 days because I was able to manually do this. So, I mean, depending on your situation and, you know, depending on the house that you're looking to purchase, if you're in, you know, where you have to go FHA, we'll try to go that route. But if you find, you know, the house that needs to go conventional, I'll work with you to make sure we get you to where you need to go to be able to go conventional. So other than those major things there, does anybody have any questions on the pre-approval process or any of the programs that we spoke about? No?
Could you hear me?
Yep.
Yes.
Oh, okay. I have a certificate for first time through a first time home buyers program. So you know how long that certificate lasts?
Is it a grant program or what's the program through? What's the certificate through?
It was through the Urban League. I don't know if you've heard of that. Urban League in Hartford, Connecticut.
No, I haven't. So I do know there are some what they call as grant programs. And so some cities will put grant programs out there and they partner with a local bank or credit union to do those programs. So every city that does it, I know Hartford, Bridgeport, Hartford, Bridgeport, New Haven, and I think another city does them. And they specifically work state with that one bank, and they have their own rules and regulations that they follow for that. So I wouldn't know that answer. I'm sorry.
Okay. So you would know how long because I had it for over a year now. Well, no, not even a year. April will be a year. So would I have to use that before that year is up? Would I have to find a house before that year is up, or do you know that?
So I don't, unfortunately, just because again, each city that puts that program forward, they have an agreement with the bank. I will tell you, depending on what stage COVID was in, there were certain grant programs that were out there, and they either continued offering them or they pulled them back just because of the current market.
Okay.
But whoever you got that certificate from directly, I would reach out to them just to inquire on that.
Okay. And with your program, do y'all, because I'm looking to buy like a 3-family,
Okay.
with your programs, do they allow that? Would I
Yeah.
be-
Yep. Yeah. So you can buy a multifamily with either program, whether it's FHA or conventional. With an FHA, the nice thing is it's only 3.5% down on a 1 to 4 family. When you go conventional, even if you're owner occupying it, that's a 25% down. So it's a huge, huge difference. So usually what I tell first time home buyers is FHA is the way to go for that.
Yeah, the FHA, okay. Okay. And where are you working out of? Because I live in East Hartford, so where?
Yeah, so we have an office in Wolcott, Connecticut, but I service the entire state of Connecticut. I mean, I'm personally in Cheshire, so I drive up to Hartford all the time. I'm down in New Haven all of the time. So we service the entire state.
Okay, now what bank is it a specific bank that you work to?
So the company that I work for is called BestWay Mortgage. We're a direct mortgage lender. So we basically have different outlets, whether different banks and investors that we work with.
Oh, okay.
So we basically, once you're pre-approved and once you're in contract, I then shop different lenders to make sure I find the best rate, fee structure, and everything to offer you.
Okay, because I know I just brought a car.
Okay.
They were saying you should, buy a house before you buy a car, but I needed a car. So would that affect my credit or?
So it'll definitely affect your credit, but I mean, as you're making on-time payments, that is a major trade line. So that's only going to help your credit. But where it's mainly going to affect you is going to be your debt to income ratio. So they're going to take your income compared it to your debt. You just added a debt. So I don't know what your numbers look like before or what they look like now, but that definitely affects it. And another thing too, you said you're looking at multifamilies. What's nice, especially with FHA, when you're buying an owner-occupied multifamily home, you can use the income from other units as your own income. So let's just say you make X amount of dollars, and then just, let's say on a 2-family, one of the units brings in 1,000. We could then use $750 of that towards your income. So that'll help offset that new auto loan.
Oh, okay. That's good. Oh, okay. Yeah, that's real good.
No, absolutely.
Yeah. Oh, okay. So, what is the next step? So, I will give you my name and number and.
Well, I'm gonna share Brandon's information in the chat, and you can get his contact information from there.
Okay.
The same for both Vic and myself. Our licenses from the state of Connecticut. So we operate in the entire state, just like Brandon as well.
Okay. Now, what program are you from?
Myself, I'm a realtor with Dave Jones Realty. Our main office is in Prospect, but we have an office in West Hartford. We have an office in Watertown, in Litchfield, and Wolcott as well. So we service the whole state.
Okay. Okay. So I already have your information. So you would put what's the other guy name?
Yeah, Brandon, yes.
Brandon, put his information in the. Oh, okay.
Yep.
Yeah, absolutely. So yeah, Jacqueline, if you want to just reach out to me, I can go over the application process with you. And then once I have all that information, we can figure out what the best program for you is. I mean, looking at a multifamily, it sounds like it's going to be FHA. And once I have all that information, I can type out that pre-approval letter and send it over to you.
Oh, okay. Okay. So, you need how you want me to give it to you now?
No, we'd rather.
No, after the Zoom call, just because I'm going to need some personal information.
Yeah, we don't want to put that on the Zoom.
Yeah.
So it's better to follow up after.
For sure.
Okay.
And Brandon, just to touch upon what you said about the FHA, I do have a condo that closed last month. That was at FHA. So I definitely agree with you. FHA is becoming more popular again. I do have a client that actually Anthony and Luz that are on the call as well. They got approved for their offer today, and that was an FHA loan.
Oh, fantastic.
Yep. So congratulations to them.
Yeah, congratulations, guys. It's awesome.
Thank you.
Very cool.
Oh, okay, congratulations.
Thank you.
Yeah, it's nice. So if I'm looking to buy a 3-bedroom, do I have to stay in that? Do I have to stay in one of those units, or could I just rent them all out?
So an FHA loan is an owner-occupied program. So basically, at the time of closing, your intention has to be that you are going to reside in the house. If you decided to leave at a later date and rent out the entire home, you're able to do so. The rule of thumb they like to say is 1 year. So, but circumstance changes. There's some cases where, let's just say your job changed and you had to move. You ended up renting out. You could do so, but FHA it is not for investors. It is an owner-occupied program.
Oh, okay. That's good to know. Oh,
Yeah,
okay.
absolutely.
Yeah, that's good. Good information.
Awesome. Well, thank you. I appreciate that.
So,
Sorry.
Things with the pre-approval,
that's fine. I don't think I have.
the buyer know how much of a home they can buy. You don't want to be looking at $400,000 homes when you can only, you're only approved for 200,000.
Oh no, that's
So,
too.
That's why it's important. The first step, the very first step we tell all our clients is to get the pre-approval, reach out to Brandon or, whoever you'd like to use. And that's usually the best way forward.
Oh yeah,
Right.
absolutely.
Yeah.
It is the first step, because you need to know what you're qualified for before you go out and start looking at houses. And the worst conversations I think I have in the day is when I talk to somebody who they've been looking at houses for quite some time, and they find their dream house, and then they call me, and then they find out that they're not qualified for it, and they were looking at all these houses that were comparable to it. So we definitely try to avoid that by getting pre-approved first.
Yeah. Mm-hmm.
And I just put Brandon's contact information out there.
Oh, thank you, Dave. Appreciate that.
Yeah.
Oh, okay.
Awesome. Does anybody else have any questions?
No, I'm pretty much asked all the questions that was. Yeah.
All right, fantastic. And Anthony, Luz, if you guys have any questions throughout the process or anything, definitely reach out to your loan officer, or if you ever needed a second opinion, Vic, steer them in the right way. And good luck, guys, on your approval process.
Thank you, guys. This was helpful too. It explained a lot.
Perfect.
Yeah, I mean, the most important thing is, like Brandon said, is don't touch anything. Don't buy a car. Don't, make sure you keep up with your credit card payments. And
Right.
Yeah. And
I actually had that happen. I had a buyer. We were in the last 3 weeks, and apparently his car got stolen. And he called me up and he says, "When is this thing going to close?" And I said, "Why? What happened?" He goes, "I just bought a car."
Goodness.
Oh,
So he got through. It didn't hit his credit score until after we closed. But
Oh, thank goodness. I just put my my do's and don'ts list in the chat for you guys too. This is usually when I send somebody a pre-approval, the list of things that I send. So just to kind of keep note of that as well.
okay.
Awesome.
Mhm.
All right.
Yeah. So.
well, we wish you the best of luck, everybody.
Thank you.
I'm just putting Vic's information up here too.
Vic is awesome, by the way.
He is a great guy, isn't he?
Yeah.
Thank you. Thank you very much.
He actually originally was my client. And
Oh,
he
really?
decided- He was so
Now, what does
impressed, he
he do?
decided to get into it.
Now, what does what's his name? Nick?
Vic,
Vic.
Vic. Now, what is he?
He's a
I'm a realtor as well.
Oh, okay. Okay.
So it was a funny story. I came to Connecticut about 10 years ago,
Mhm.
bought my first house. And
Mhm.
shortly after, I decided to get into rental aspect of it as an investor. And I was dealing with another agent, and I would send her properties and try to contact her. Hey, listen, what do you think about this one? Can we go take a look at this one? And by the time she got back to me a day or two later, the property was already under contract with someone else.
Oh, God.
And especially in today's market, you need to be working with someone that you send them a message or you send them a text within a couple of minutes or within an hour or 2 hours, they should get back to you. And
Right.
unfortunately, with her, it was like a day, 2, 3 days later,
Mhm.
and properties would be gone by then. So by luck, I got in touch with Dave, and him and I started working. I bought 2 properties from him, 2 multifamily properties. All my mortgages were done through BestWay Mortgage with Brandon and the team that they work with. So personally, I've dealt with them, had great experience with them, had great experience with Dave as well as a realtor. And I decided, you know what, let me get into the business as well.
Exactly. That was good. That was excellent.
Yep. And I saw firsthand the kind of experience I was having with Dave versus the other agents. I was like, you know what, this is the way you treat people. And that's why I enjoy working. That's how I enjoy working with BestWay Mortgage also. They're on top of things. You know, you email them a question or you're unclear about something. They're quick to get back to you. You call them, you need to talk to someone, they're local. A lot of clients, they deal with mortgage companies online, Rocket Mortgage and some of these other companies. You're dealing with a 1-800 number, you're talking to different people every time. With them, you have their number. You can reach out to them directly. They'll get back to you. You send them an email, they'll get back to you. And just a communication aspect of it makes it so much easier and smoother that you can get things done.
And I think one of the first things I told you, Vic, is, well, you were working with Brian, but they answer the phone on the weekends, so.
Oh yeah, they do.
Oh, wow.
They do, absolutely. And let me tell you, I had a condo that closed last month. The seller was concerned about the buyer's financing. And as buyers, when you're trying to get your loan approved, you want to make sure you're working with the right team. And when I mentioned to him that the client is being represented for their mortgage with BestWay Mortgage, that was assurance enough because he had a lot of deals that he's dealt with where he dealt with BestWay Mortgage. So sometimes when you're dealing with someone that's local in Connecticut, it makes for a win-win situation.
Yeah. So, yeah, to expand a
Vic.
little bit more about what Vic's talking about is, you know, as we go through the process, and I think you'll experience it also, Anthony and Luz, you put together a team. So that includes inspectors, attorneys, insurance agents, you know, and so on. So you have a group that all working together. And, you know, we have a bunch of folks that we rely on that we know that have serviced our clients very well and we trust them. So.
Oh, okay. Yeah, that's good to know.
It makes all the difference in the world.
Yeah.
Yeah. Yeah.
All right. Well, thank you guys so much for joining us.
Thank you.
Appreciate your time, and we look forward to working with you guys and helping you. Brandon, thank you so much for your time.
Absolutely.
I really appreciate it.
Yeah.
Yeah, thank you guys for giving me the opportunity. I really appreciate it.
And we will be
Thank
following this up. We will be following this up with some more meetings. We plan to have a closing attorney here to present and, you know, make any comments, you know, so that you can find out what that process is like. And I have an insurance agent that we can also ask and, you know, to join us. So we'll be, you know, stay tuned to this, our Facebook page, Connecticut First Time Home Buyers, and you'll see the announcements for it.
Okay.
Friend our you know, Facebook page.
Yeah.
So.
Oh, okay.
Okay.
Okay. Thank you.
Thank you, everybody.
Thank you, guys. You guys have a wonderful evening.
Thank you. Have a good night, guys.
Yeah.
Take
Good
care.
night. Yeah.
Bye-bye.